Welcome back to yet another case study. We're still going on with the same section of price. This was November 17th, 2021. As always, I'm a developing student, and these are just my interpretations of the price. Take what you want out of this, and big thanks to ICT. So basically, I want to start with what is overall order flow. As we know, order flow is bullish, as we see here. Uh, our institutional order flow is clearly bullish, and we have now come back down to an area of possible internal range liquidity to external range liquidity. Market maker buy model on the higher time frame. So higher time frame context is bullish. Overall, we're bullish. Now we have come back down into this internal range liquidity. Prices now change state delivery within this fractal here. So right now, at this point in time, we are pretty bullish. We want to see this high be the draw on liquidity. We know it's a more likely that we're going to head to this high than we are to head back down to these lows. So therefore, we are going to be looking for more longs within this area. So let's get straight into the action that we had. So we look here on the hourly chart. As always, if you want to look at these interpretations on your price, I would highly recommend probably, or these on your chart, on your own chart, do these in your own charts. You're gonna get the most out of it. So as you see here, what do we end up happening? This was the day that we had. We're kind of accumulated within this CIBI in that PM session yesterday, and then we come down, and then we actually take this low within this imbalance here, and then we spring up to this buy side liquidity here, and then we come back down within this range, and then we kind of consolidate throughout the rest of the day. And yeah, that is the delivery of the day on the 1 hour. And I'm just highlighting the delivery and the fact that we were consolidating within this 1 hour PD array right there. Right here, we have a previous day high that we end up previous day high slash mitigation. This right here, technically be a mitigation or a breaker block. You can then map that high out in time, and notice when does real support and resistance act in the market. This is going to be this support is going to hold because we have a fair value gap with it. There's also a narrative, it's a previous day high. Overall, we're bullish, so therefore we can say that this high is going to act as support, and that's what it ends up doing around market open. So right here we have a 15-minute chart, so if you want to do your annotations, I would recommend doing so. All right, and here at market open, we end up having a low resistance liquidity signature. Anytime the market opens or is about to open, I like to see, hey, where is the low resistance liquidity and where's the high resistance liquidity? That's kind of how I act on, like, whenever I'm looking at anything within the market. Where is the low resistance liquidity? Where's the high resistance liquidity? What are we likely going to favor? Where are we more likely to head to? That is what I like to look for. Right here, market open, we have low resistance liquidity. We've had displacement lower. We've shown us that we've had bearish for value gaps here. This is at 8:30 opening price. We come up, we come back into this 15-minute imbalance, and then boom, we sell off and take these lows here. Complete this low resistance signature. Where is this happening? Where's this happening? This is happening within that 1 hour PD array, that 1 hour fair value gap. Also with that previous day high, that mitigation block. And right here, here's a 5-minute chart as well. And right here is market open. I'm just showing market open. We end up coming into this imbalance. Then we come back up into that imbalance again, and we boom, we have a big nice price run to this low here at market open. But this is really all this is doing is just setting the stage for buy side delivery. And see here, this is just a false rally. Give people a false dump here, like, oh, it's gonna go forever. No, it's just taking liquidity here to then have a change state delivery to then head to buy side. As you see here, here's that 1 minute delivery within market open, and notice what we do at market open. We then come back down, and then we take sell stops. Then we consolidate, then we come back up into this fair value gap. We have a rejection block here, and then we displace lower at around 947. And here is the 5-minute chart for that 10 a.m. delivery, that 10 a.m. expansion. Every single day, there's likely going to be a 10 a.m. expansion within the market. If there's not a 10 a.m. expansion, there's likely going to be a 2 p.m. expansion. Here, 10 a.m., we displace higher. We then have a balanced price range. We have a fair value gap in and then a fair value gap out. As soon as we have this fair value gap out, we know that or price is more probable, the probabilities are more in your favor for a buy side run than it would be for a sell side run. So here we have balanced price range. We act on that balanced price range. We come back up. We have a mitigation block or a breaker block. I would say I would rather use this as my breaker than these, just because it has a more concise and clear body right here. So I would use this mitigation. Then we come back up. We have big displacement, and then this concentrated encroachment. Boom, held perfectly, and then ride all the way up to that high right there. And that was the delivery that we had within that 10 a.m. expansion. Let's break it down. So here we have 2 minute. The 2 minute chart, we had that big displacement lower. And then as soon as we close above this candle here, I am marking that as an order block or change of state delivery. Right here, the algorithm is going to change the state delivery to buy side delivery. And conveniently, what does that map up with? It maps up with a fair value gap. Then we come into this fair value gap, accumulate longs, come back into that 15-minute fair value gap, and then we displace lower, reclaim Mississippi, and then we had higher expansion, boom, fair value gap, and then boom, buy side. So pretty nice delivery. Here's that mitigation block again right here. Kind of accumulate around that, and then see buy side. And lastly, here's that 1 minute chart. And notice what this sets up. This impulse move lower, it happens right at 950. Right at 950, we take sell side liquidity, and then we start delivery toward buy side within this 950 macro. This 950 macro is a certain time of the day in which we are going to have this. It's just a certain roadmap. 950, we come into sell side, boom. Market change state delivery here on the 1 minute change state delivery would here be on this candle here. Change state delivery right there, and then we start respecting bullish PD rays. That balanced price range acts as a wall, and then right here we have another thing. We're retracing lower, change of state delivery. This order block holds, displacement, boom, right here, and here's that constant encroachment of that fair value gap again, and then we just are in buy side expansion. Here as well, I want to note out standard deviation projections. Here we have this fractal in price here, this fulcrum point right here, and then we have the first expansion. We have the first retracement, not expansion. First retracement leg I like to use. Where does that line up with? -2, -2.5 lines up very nicely with that. And -1.5 is almost that high. We fall right short of it. And then what's more important is the PDA ray that is around that. What is the PDA ray that is around these fulcrum point or these standard deviation projections? Is that previous day high, or not that previous day high, but that previous high. We're going to respect this a lot. The algorithm is gonna refer to this high instead of these price levels here. All right, and here I'm just showing the macro again. The macro allows for a retracement, and right here this is that 2 minute chart. So we have a retracement into this big BISI, sorry. Constant encroachment that holds very nicely. And what else are we doing? We're within this mitigation block, and the reason why this high acts as real support is because we are within this fair value gap. This fair value gap allows it to. And also, what is the bias? The bias is bullish. We're looking for this high to be the draw on liquidity. We have this high right here, this mitigation. We map that out, mapped with this fair value gap, high probability long setup right here. Say you missed out on that, there's also this fair value gap to look to reaccumulate that. And then we actually tap it here again here. Maybe you didn't like that. You looked to engage in on one of these order blocks. Here we have this order block high, this candle high, boom. That gets respected. As long as you're in line with order flow, you're going to be on the right track. All right, and here as well is another standard deviation projection. It's a fulcrum point right here. As you see, -1.5. We fall a little short of that. But again, using standard deviation to map out potential targets, but don't take these for face value. All right, and here at this point in time, once NQ has taken this high, we are really diverged here. So NQ is really strong in this situation. NQ is really strong within this situation. So NQ actually ends up taking this high, and ES fails to do so. And notice how after ES fails to take this high, ES should have taken this low. Hypothetically, ES should have had the weakness to come down and take this low. But since ES failed to take that low, that's kind of telling. And that's kind of like bias for the next day. And I guess we'll see what happens in the next one and in the next case study. But the fact that ES failed to take this low is very telling. It's pretty telling that ES couldn't even take this low. Notice NQ is all the way up and taking these highs here. So ES is strong, or NQ is very strong here. ES is pretty weak. And the fact that ES can't take these lows is kind of telling. So we come up, and then we take this high. So we have SMT at a certain time, and it's clear. It's clear in time and in price. And what else do we have here? What else do we have here? We have a low resistance liquidity signature. So as we see here, where's the low resistance liquidity? Where's the high resistance liquidity? We just took a buy side liquidity. We have just taken a big buy side liquidity pool, and we have all this low resistance liquidity. What is more likely? What is the algorithm more likely to reprice to? This low resistance liquidity instead of this high resistance liquidity. We're likely to reprice to this low resistance liquidity. We end up taking this high with an SMT. We have displacement lower. This fair value gap overlapped with this fair value gap. This acts as a balanced price range. We don't need to see price trade back up here because we have this fair value gap that overlaps with this fair value gap. It's going to act as real resistance. We end up respecting that. Displacement lower, pull back, fair value gap. There's not too much retracements here. This ends up being a very quick market maker sell model. Then we come back up, fair value gap again, gets traded to, boom. Second stage of redistribution right there, sell side met. And here is that market maker model. We have your original consolidation, accumulation, then maybe another area of accumulation that I didn't mark. Then you have smart money reversal, distribution again, maybe another area of distribution I didn't mark. Again, it's just a schematic. The price comes down, takes that original consolidation. And in this green box right here, that is that balanced price range on the 5 minute that we had earlier. That's this BPR. So I just extended that out in time and look at where we end up respecting. Right at that BPR. All right, and here is the 5 minute annotations. And what I just want to highlight is this area of old buying. This old area of buying now becomes new area of selling. That's where we end up having that silver bullet right at that area. Boom, you project those candles out in time. On the 5 minute, it comes a little bit more clear. Boom, map that up with that fair value gap in this little order block right here. Boom, that's a strong delivery in price, and it delivers very nicely. We have that. Then we can, maybe you didn't get after there. Maybe you're very patient. Maybe you're just looking to very scalp this. Boom, displacement fair value gap in line with these order blocks. Boom, right there. That is it. That's all you need. All right, and here we have taken sell side liquidity. We're within this balanced price range, and we're just waiting. What is price going to do? And these are just my 5 minute annotations. As you hear, we have that sell side liquidity has been taken within this balanced price range, and just look at these wicks. We know that price might want to rebalance here. We're showing respect to bullish PDAs, so price is probably going to rebalance. What ends up happening? We end up having that change of state delivery right here. Then we come up and we reprice higher. Once we reprice higher, what are we going to do? We end up having a change of state delivery on the 5 minute. You can map this the change of state delivery on the 5 minute. Then you can map out this 5 minute order block. These two up close candles that ends up getting respected. We end up having a deep retracement here, probably to what? Optimal trade entry. I didn't actually have that, but yeah, this does look like optimal trade entry. Then displacement, and then this order block gets traded to right here. Boom, we have displacement lower to take sell side right there. So as we see here, also what is happening? Certain time of day, 12:50 to 1:10. That's another macro. We end up taking sell side liquidity, and then 1:10 starts the delivery higher. We have a breaker right here. So we have a breaker and also that 5 minute order block, 5 minute change of state delivery. So it's being a nice area of accumulation within the market that we end up mapping to buy side here. And notice here, this is on the 1 minute chart, but we end up coming right into that 1 minute fair value gap right here. Ends up being a draw on liquidity, but for low hanging fruit principles, I would look to target this high, but we end up actually coming within that imbalance here. So yeah, here is standard deviation as well as this kind of market maker sell model. You have your distribution, then you have redistribution, smart money reversal, accumulation, low risk entry, and then you have another area of accumulation right there. And notice where if this last manipulation move lower, -1, boom, map that out in time. That's pretty much that high. I think it might be. That's very nice. That's very nice. It's very nice to see that delivery. All right, and here are those 5 minute annotations again on the chart. And now we are shifting delivery back into a market maker sell model. So there was kind of some opportunity here. Normally, I like to look at that 10 a.m. expansion. I like to get active within 10 a.m. expansion. Anything after that, I'm not really too interested within. But as you see here, there is opportunity within this. And then this is that 2 p.m. time. And also, this is Sorry, I never referred to this, but this is constant encroachment of this 5-minute fair value gap. Notice how well we respect that. If price does want to displace lower, if we do want to respect this, we should hold constant encroachment of this. We don't even want to see this whole thing get filled in. Notice as well, what do we have here? If we map this out, this is an old area of selling. Sorry, an old area of buying. So anything on the left side of the curve, any areas of old buying, old bullish order blocks will now become bearish breaker blocks. And boom, we end up respecting that very nicely right here and throughout the rest of this. All right, and here is that on the 1 minute chart. As you see, we have 2 p.m. start sell side delivery here. We have getting displacement. We have a run on stops here, constant hold. Then we have a breaker block and a fair value gap here. Boom, that is your silver bullet. That's your silver bullet. We have it right here. You maybe look to scalp this for maybe a few points, or say you enter here, you put your stop at this high here. You got stopped out. You got stopped out. You would have got stopped out. You would have took a loss. Say you think this is your silver bullet. You would have got stopped out. That's completely okay. Like, losses will occur. If you trusted that to be the silver bullet, you wanted to see that be the silver bullet, and that would have ended up stopping you out, there's always going to be the next day within the market. This just was a loss. You just marked that. You took a loss. Cool. There's nothing. You executed right. You saw that there's a breaker. There's a breaker right here. Last down close candle. It's a big beefy candle. Also, in line with that fair value gap right here, you're looking for this to be sell side liquidity. That is completely fine. That's okay. Like, that will happen. And then we come back up into that 5 minute fair value gap. Look at how well we respect that, and we also take buy side liquidity here. We also have that area of previous mitigation that we come back into, and then we have sharp displacement lower. We have sharp displacement lower after taking buy stops, displacement lower. We end up creating a balanced price range. Fair value gap in, fair value gap out. So we should definitely respect this if we do want to head lower. Then we come back lower, and then we fall short of this balanced price range. We end up taking this area of liquidity. That could be an area of partials. Then we come back up, and then we just chop here. We just don't really do anything meaningful. Then we come back up into this reclaimed SIBI, into this balanced price range as well. Respect that perfectly. Respect that order block as well perfectly. And then we start this sell side delivery again. And then we displace lower. And then we reaccumulate within here. And then displace lower. And then ultimately taking the draw on liquidity a little bit after 4 p.m. So this was a market maker sell model. Again, you have your area of original consolidation. Then you have accumulation, reaccumulation, another area of reaccumulation, smart money reversal. And then you have area of distribution, and then you have another area of redistribution, and then you have another area of distribution, and you have your last area of distribution. This as well, using standard deviation, negative 1.1.5 is your silver bullet area. Silver bullet zone. Where does this map up with? This area of old selling right here, or old buying right here, now becomes new selling right there. Boom. Ends up getting respected perfectly with that order block as well. And it doesn't look like there's any fair value gap here. And then boom, we end up displacing right to negative 2 to 2.5. If we respect negative 2 to 2.5, we're looking for a premium PD array, which determine this high, which looks like that might be what we draw to next is this high right here. But yeah, just nice delivery within this market maker sell model. Say you trusted this to be your 2 p.m. silver bullet. You trusted this was a nice time of day to look to get engaged. And you would have took a loss. That's fine. Like I've been saying, you are going to take losses. You're going to come back up, take buy side liquidity here. Why do you think? I have a theory. The fact that this was just very fast delivery, we're encroaching the end of the day. And at 4 p.m., the algorithm wants to take sell side. So the algorithm wants to take sell side at around 4 p.m. So we're just going to entice traders within here. We're going to kind of chop around here to then take buy side. Here to stop out traders to cause max pain. The market doesn't really want to tip off at 2 p.m. right here. We want to take sell side at 4 p.m. That's where we want to close. So we're not going to all of a sudden take sell side here at like 2:30. We're going to wait a little bit. We're going to drag this out. And we kind of have a little lengthy market maker sell model. But in all principles, we're respected here. And I don't realize... It might be something that I draw out here, but I don't really know. All right, and as well here, you have your standard deviation projections. You have that last manipulation move, and then you have that first retracement move that I'm using, -1, nice little low hanging fruit. Also maps up with that old low right there. All right, and here was the day's delivery. As you see here, we have the 8:30 opening price. We had come down. We manipulate below that 8:30 opening price. Then we have expansion higher. We have this balanced price range. Price reacts perfectly. We then have another area of accumulation. We end up taking buy side liquidity here, forming SMT. We then form a balanced price range. We don't expect that to happen. We then have a very fast market maker sell model. Then we have another immediate buy side delivery up here to rebalance, and then we have a slower market maker sell model throughout the rest of the day. So this would have been a nice. This was nice fractal in price. We end up having open, low, high, close near the low. So I guess we'll see what ends up happening within this fractal price. I will do another review of this price action throughout the next day. So I'm curious to see. I'm expecting to see higher prices on this because, as I was talking about earlier, the fact that we had this SMT and ES failed to take these lows is a little bit suspect in my opinion. Anyways, I appreciate you guys for watching this. Hopefully you might have seen something that you liked out of this. Anyways, I appreciate you, and I will see you guys in the next one.